If you have been a carrier for a while, then you know that your company's loss run history is important when renewing or shopping for insurance. Insurance companies use your loss run history to see how risky you are to insure, affecting the premium you could end up paying, which could be a lot. In other words, if you keep a clean loss run history, you could see better rates. So, what is loss run history report? Loss run reports are a history of any claims your business has had while you have been in business or insured. Simply, the report gives you and potential insurers a clear picture of your experience, how well you operate your business, and the degree of risk associated with insuring your company. The report includes insurance provider, policy number, date of each claim, the amount paid or on reserve, and brief description of the claim. If there is a claim, each one is listed in their own line, and the report will specify whether each claim is open or closed. If you have had coverage with more than one insurance company, then you will need to request a loss run from each of these providers. Why loss run history is important to underwriters. Underwriters will take a lot into account when looking at a loss run report, such as a total claim occurrences, total loss amount, average amount of each loss, and how many miles the carrier had per loss. A carrier that has 2 losses but runs 2 million miles is looked at more favorably than a carrier with 2 losses and only 100,000 miles. The severity of a loss can also reflect a one-time catastrophe or signal a big problem in your business operations. For example, frequent claims on the report could signal issues in your maintenance schedule, business practices, or manufacturing process. Tip: to prevent the underwriter from making any assumptions, provide an explanation of the loss activity. Most underwriters ask for a 3 to 5 year loss run history, or for newer carriers, however long your company has been in business. They may also ask for the last 4 quarters of IFTA reports to show what states you operate in. Tip: your total incurred claims should not be more than the amount you paid for coverage in any given year. Insurance companies usually price what they view as the best performing carriers at 2 times the expected average annual claim cost. For those they believe to be poorer performing carriers, the costs are often 3 to 4 times the expected or average annual claim costs. How to request a loss run report. You can either download the report through your current insurance provider's online portal or call or email your agent to ask for a report. When asking for a report, be sure to provide the name of the policy it's insured under, the policy numbers, and the number of years, the policy periods for which you are seeking history. It is important to note that the agents on record typically are the ones to obtain the loss runs, and they do not want to lose you as a client. Oftentimes you are asked for a report, they purposefully delay getting you the loss runs out so you cannot shop around. Tip: obtain your prior year's loss run on an annual basis so you have it available when you want to shop your policy around. In most states, a company is legally required to provide your loss runs within 10 business days. Best practices to keep loss run claims down. Accidents will inevitably happen, but proactive safety is vital in proving you are taking safety precautions to prevent accidents from happening. Generally, trucking companies with minimal loss activities, utilizing telematic data, and great CSA scores are in a better position to gain access to more insurers with better pricing. Here are some tips to help your trucking insurance risk history. First, maintain a clean driving record. While mistakes can happen, new carriers should do everything possible to keep their driving record clean. This means practicing defensive driving habits to reduce the likelihood of vehicle accidents or speeding. For example, and I know I'm going to sound like your mom, but do not use a handheld device while driving. Utilize Bluetooth capabilities or hand-free options. Pay attention to work and school zones and their reduced speeds, and park in legal parking areas for large trucks. The severity of the violations makes a difference, and handheld violations are up there. It is also important to pull your motor vehicle record, or MVR, at least once per year to check that it shows the correct information, and always challenge incorrect information. If you need help, click on the link below. Implement a proactive driver training program. Training your drivers on conducting a proper pre-trip and post-trip inspection is as important as teaching them how to drive the truck. Might sound crazy, but some of the easiest things to catch during a driver inspections are also the most common violations written up on a roadside inspection. Violations and accidents are the quickest ways to increase your insurance premiums to unaffordable heights. Use ELD telematic data to improve safety. This goes hand in hand with proactive driver training. Any driver red flags can immediately trigger video training schedules related to the defensive driving, fuel efficiencies, hours of service regulations, driver ELD training, or whatever topic they are having real-time issues with. Build a good credit history. A high credit score means a better rating. The theory with credit is that if you manage your personal finances well, you are more likely to take your driving and safety seriously. Be sure to pay your bills on time, including mortgages or rent, credit cards, auto insurance, and car or truck payments. Another way to keep your credit score high is to make sure your credit utilization rate is below 30% if possible. For example, if you have a credit card account with a $10,000 limit and a $5,000 balance on the card, your credit utilization rate is 50%. This means making sure you pay down any credit card to below that 30% of your total credit limit available to you. Another option is to ask your credit card limit to be increased on a card or two to make the credit utilization rate lower quickly. Follow DOT compliance rules. All carriers will eventually have to deal with DOT roadside inspections, DOT compliance checks, and DOT safety audits. Be sure to follow all hours of service, drug testing, licensing, and safety requirements set by the FMCSA. Have a written safety policy. Written safety policies detail how you handle accidents, drug and substance abuse, and other safety-sensitive issues, and can be a key to telling your safety history and lowering truck liability insurance premiums. The best place to start is showing proof of documented safety policies for drivers and managers, as well as proving that they are being followed, such as documenting completed training, as more training equals a better safety profile. Need a commercial truck insurance quote? The worst situation to be in is getting bad commercial trucking insurance coverage and being committed to it for a year when one accident can ruin your business. Fill out the form linked below to get started. If you have any questions or concerns, please call us at 800-724-5523 or email us at info@cnsinsures.com. And as always, stay safe out there.